Every single day, most traders sit down at a desk and ask themselves the same question. Why does price keep taking my stop loss before moving exactly where I thought it would? You mark out support, price breaks below it, you sell, then it reverses. You mark resistance, price breaks above it, you buy, and then it dumps. And after a while, you start thinking to yourself, maybe I need a new strategy. Maybe I need more indicators, or maybe I need to buy another course. But what if I told you that the problem wasn't actually strategy? And what if the problem is the fact that you're looking at the markets completely backwards? Because after years of trading, blowing accounts, passing prop firm capital, managing thousands of dollars worth of funding, and reviewing over 1,000 trades, I realized something. And that's the fact that the market follows a very simple process every single day on every time frame over and over again. And once you understand this process, trading becomes so much simpler. So in this video, I'm going to tell you exactly how we use accumulation, manipulation, and distribution. And then I'm going to show you the bot strategy I use every single day to capitalize on this market cycle. Now, the goal of this video is very, very simple. I'm going to break down each component of the strategy step by step, and then I'm going to show you some real life positions on the charts so you can see it happening with live market data. Now, before I get into the video, just understand this. I used to believe myself that the market moved completely randomly. I spent so much of my time looking for signals, indicators, different strategies, YouTube videos, everything you can think of. I've already tried it before. Yet I would still struggle to answer one very simple question, and that is, where is the market actually trying to go? That was before I realized that price repeatedly moved through 3 stages. And now I can look back and see how easy it actually is. So without further ado, let's get straight into the breakdown. Okay, so the only strategy I've used for 5 years, and this is completely proven. Like I say, I have so much backtested data on this, and I will show you guys that within this video. But we focus on 3 main aspects. We've got accumulation, manipulation, and distribution. But it's understanding where we want to be in the market within this 3-step cycle. And that is exactly what I'm going to break down within this video. So before the move can happen, the market needs participants, whether that's retail traders, institutions, whatever it is. But the overall rule is before it can move higher, it needs sellers, and before it can move lower, it needs buyers. So price spends time building liquidity, creating opportunities, creating expectations, and creating traps. So if I just break down this for you, this is a form of accumulation. So as you can see, we've got resting buy orders at the lows, and we've got resting sell orders at the highs. So all of these areas here within this close consolidating range is generating one thing, and that is liquidity. So we don't want to be in the market at this stage at all. It's just accumulating orders, it's moving within a very, very tight range, and there's not really too many areas to capitalize on. But the good thing is, once we have seen this whole process playing out, this is the first sign that our strategy is going to play out. So that is the accumulation phase. Now, here is where most of you will lose money. And this is the part that completely changed my understanding. Once the market has accumulated enough liquidity, it often doesn't move into its final destination, and it moves against the majority. So what do I mean by that? This is called a manipulation move. And why does this happen? Well, stop losses need to be triggered, breakout algorithms need entries, and retail traders need an excuse to commit. So the only tip I can really give you in this area is we need to have patience. So as you can see here, this is a form of manipulation. So we have all of these resting highs and lows here within this accumulation phase, generating liquidity. And what you'll notice here is after a while, that liquidity actually got swept and we made a fake out move. And this is what catches a lot of you retail traders, and I see it time and time again. You guys get FOMO, you see a big impulsion to the upside, you think it's a breakout strategy and we're going to carry on moving to the upside. But this is just simply sweeping the liquidity. Now, before I get any further, this is actually happening on multiple time frames. So it can be happening on the daily chart, the 4-hour chart, 5-minute, 15-minute. This market cycle is happening on every single time frame. It's called fractal, so you need to keep an eye out on it. Now, the next stage after this is the signal for distribution. So after we have seen this move playing out right here, this is where we're going to be looking for entries. So this is the phase everybody wants to catch, but they end up getting in too early. So from this area, we see clear trends, we see clean expansions, and the move that previously looked obvious. usually happens directly after this move right here. So understanding this exact move is what makes the strategy so strong. And if you understand the timing of this cycle and you can actually see it playing out in real time, you can capitalize so heavily on this move very easily with the two indicators I'm going to show you within this video. So just to break it down quickly, accumulation creates liquidity, manipulation then collects that liquidity, and distribution delivers the actual move. So as you can see here, we've had again our form of liquidity being formed here with the accumulation. So this is our accumulation phase right here. We then have here our manipulation phase. So we've now swept all of this liquidity and taken out all of these sell orders here. And then here we have our expansion or distribution. And that is the real move to the downside that people initially tried to catch, but they failed to because they got caught in the manipulation. So that is AMD as a cycle. It is a very easy market cycle to spot. I'm going to show you two examples here on the actual chart. So as you can see here, this is on the 1 hour time frame. So as you can see, we have a 1 hour form of accumulation right here. So we're accumulating orders. We're working within a tight range here. Then as you can see, we actually broke out and manipulated to the upside before then distributing to the initial direction that we wanted to move. And this is a perfect example of AMD. It's a very clean example, and this is on the 1 hour time frame. So as you can see, it's even happening on a higher time frame perspective. Now, down here you can see an example on the 5-minute time frame. So again, exactly the same concept. We had a form of accumulation here, setting up both buy and sell orders within a very tight range. We've then broke out in a form of manipulation with impulsion to the upside. So as you can see here, this candle was a pretty heavy candle to the upside. There was a lot of volume involved, which is going to catch a lot of retail traders out. But then, as you can see, we faked to the upside, swept all of this liquidity here, and then pushed to the downside in the actual direction. Now, there is a few refinements we can make to this, but I do mention a lot of these within the free Discord. Now, the major question is, how can we actually capitalize on this move and take trades repeatedly and consistently? And that is where the box strategy comes into play. So now I'm going to give you the exact setup so that we can catch these moves every time using two very simple indicators that are going to guarantee that you can catch the reversal at least 76% of the time. So I'm just going to quickly break down the 3 steps of the strategy, and then I'm going to show you a live example that we took within our community today. So the first step is to simply wait for a manipulation out of the breakout area. So at this point right here, all you have to do is, for Asian range, for example, we're going to wait for a breakout of this accumulation. Now, what you can do to make this a lot easier is simply add 2 alerts at both the high and the low of Asian range. So once this is done, and once we've had a sweep, that is step 1 of the strategy complete. So very simple. From here, we're going to wait for a shift in market structure. So for example, in a bearish example, you can see we've swept the lows here, we've pushed to the downside, we've then had a break of structure to the downside, making a new fractal low, and we've got a fractal protected high here. And as you can see, once we break that protected high, we have had a market structure shift to the upside. Now, there is 2 rules that we use for the market structure shift. The first rule being we must break structure to the downside before the shift upwards. And the second rule is we must have a solid body close when we do close above that previous fractal high or low. Once you've marked this out, that is step 2 of the strategy complete. And step 3 is the retracement tool on the fib. Now, this is going to give us both our entry area, our stop loss area, and our take profit area. So it's very important that you get these levels correct. I'm going to tell you the levels within this video and show you exactly how to use both of these indicators. So once we've had our shift to the upside or the downside, we are going to draw our fib from the fractal low to the fractal high in a buy position, or the fractal high to the fractal low in a sell position. And that is going to give us 3 values. We're going to get our entry area, we're going to get a stop loss area, and we're also going to get a take profit area using something called standard deviation. But this is basically the 3 steps of the strategy. And what we expect is price to drop down to our entry area and then react into the direction. And with that being said, we can capitalize off the shift to the downside. This is our first sign of a reversal, and we can capitalize on the retracement and the distribution to the downside. And that is how we capitalize on the AMD cycle. Now, I'm going to show you a live example on the chart of an entry we took on GBP JPY today, and I'll explain exactly how the strategy works. Okay, so this is the GBP JPY trade that we took today. I'm going to quickly break down a few of the other confluences before we get into the actual AMD cycle box strategy. Now, firstly, we were working within a daily fair value gap here. So we had a bearish daily fair value gap, and as you can see, we tapped into the 50%. We'd already tapped in, but accumulated some orders around this area already, but we wanted a tap of the 50%, which you guys can see right here. From there, I've dropped down to the 15-minute time frame and simply waited for Asian range to play out. So as you can see, Asian range here has played out. We've got a form of accumulation right here. Give or take, there is a little bit of expansion through our Asian range, but this is because we are trading a JPY pair. Now, as you can see, we actually swept to the upside here, taking out this form of liquidity right here. So the previous session liquidity was taken out. And as you can see, we actually printed a new fractal high. So we had a fractal here, we were trending to the upside, all of these fractals were increasing, higher high, higher low, and then a higher high and a higher low. But now what happened was we actually had a shift to the downside. So what did we notice? We dropped down to the 5-minute time frame. And as you can see here, we actually shifted and broke this fractal to the downside. So here was our market structure shift. I'll mark that out here. So that was our market structure shift area because we formed a new fractal low. So from here, all I simply need to do, because both of these first two steps are complete, the liquidity sweep and the market structure shift, now we simply need to draw a fib retracement from the highest fractal point here that was formed, all the way to the fractal low, which caused the market structure shift leg, which was this low right here. And as you can see, I've drawn my fib to this level and dragged it along. And I simply put my entry to the 0.618 area with my stop loss at the 1.03 and my take profit at the minus 0.2. And from here, you can see that in this form of accumulation here, so we had our accumulation of orders right here, we had a manipulation to the upside, and then our distribution to the downside. So this was the entry. So as you can see, we actually got tapped in, and initially we came back to break even. But with that being said, we just reacted out of our higher time frame daily fair value gap. So I was more confident within this entry, and I was confident enough to hold it out to the 0.2 because this uses standard deviation. Now, just for proof of concept, I'll actually put the entry idea and the result on the screen just to show that I did send this entry into our Discord community. But this is the strategy that I trade every single day, and it is so simple. Now, with that being said, I will quickly show you the fib settings that I have. So I have the minus 0.2 here. I then have the 0.618 and the 1.03. These are the three levels I use. I have no background. And then I also have my trend line ticked here so I can see where I've drawn the actual fib leg to. So that is the strategy that I trade every single day, and I've used this box strategy cycle for the last 5 years in my trading career. So if you did find some value within this video, make sure to leave a like. If you have any questions at all, make sure to leave a comment under this video. If you guys do have any questions, I'll be sure to reply to all of them. But that is going to be it for this video. I hope you guys enjoyed. Make sure to subscribe, and I will see you in the next one. Peace.